Hello everyone, this is Martin. I'm producing this video. It is now Sunday, July the 5th, and what a beautiful weekend we've got so far. Tonight I will be not looking at the charts. Well, I might look at the charts to see what's happened after the Greece referendum, but I certainly won't be trading. Instead, I'm going to be watching the big soccer game. As you know, I'm a big soccer fan, or if you were living in Europe, you would call it football, but I'm a big soccer fan, and tonight's game is between the U.S. team and the Japanese team, women's FIFA World Cup, and I'm actually rooting for the Japanese because I know the United States team is very strong. But anyways, it should be a good game, so that's what I will be doing tonight, relaxing, enjoying this great weekend, and then we'll get back to business later tonight or for tomorrow. And anyways, here we are. We're going to start with the Euro USD pair. Okay, here the Euro USD daily chart, and I want to talk about a couple of things. One, with all these charts, what happened with the craziness of the Greece debt crisis. What happened, and on the charts for this week, I put on a big red arrow. You can see that right here, and this shows the start of the trading week last week, and this is what happened after the craziness where Greece decided that they didn't have the money to pay back, and they were not going to pay back their $1.5 billion, or I believe it was 1.6 billion, whatever it was. It's a huge amount, but the previous day, you can see price closed here. On that particular day where Greece decided that they were not going to pay back, we opened with a huge gap down here. And by the end of the day, and I was really surprised by the magnitude and the swiftness in the price closing the gap from here to here, and then rising even higher to a resistance area all in one day. So this was a massive move, first of all with a huge gap down, then it closed the gap, then went even way higher, and the next day closed back down again. And this was interesting. This candle right here closed below the 50, okay, and closing below the 50 showed me that price was being rejected by the sellers. Again, it was a big move down, and if you would have opened up a trade right here, you would have made quite a number of pips. Let me see what that would have been. Well, about 90, 100 pips. However, normally I say wait for price to close below a certain area, and last week I indicated for you to wait for a breakout below the 111.30 area, which is actually right about here. Okay, and normally I ask you to wait to the end of the day. So if you would have waited, you wouldn't have gotten in on this trade. And the only other thing you could have done, and for some of those day traders, you would switch to a 4-hour chart. Let's see what happens. Okay, here's the 4-hour chart, and you can see it was after the huge up day. Price closed with this candle right here. Price closed below here. We are below the 50 SMA. Price went sideways here at the support area, but with this candle right here, it closed below the support. If you would have gotten in right there, okay, you still would have made about 70 pips. So sometimes and often it is better to look at a 4-hour chart, especially if you're looking for better entries. Switch down to a 4-hour chart. It'll give you more opportunity to trade. If you sometimes leave it on the daily chart, and I know most of you are, you're going to miss some of the trades, but that's okay. Don't worry. There's always another trade around the corner. So again, that's what's on the 4-hour chart. Let's switch to the next one, the British Pound USD daily. Okay, British Pound USD. This chart actually gave you a better opportunity to trade on the daily chart. And I mentioned last week that watch for or wait for price to break below the 156.70. It did with this candle right there. So here's the start of the last week with the red arrow. You can see by Wednesday it closed below the 156.70, and that's the area that I asked you to wait for and look at. And if you would have gotten in right there at the start of the next candle, you would have made about 50 pips. So again, some pips there probably would have given you a better opportunity on the 4-hour chart. But anyways, that's so that trade would have worked out successfully on the daily chart, daily time frame. Now, price is going sideways. Wait for evidence. Here I've drawn in with this dotted line here an uptrend line. Here we have the 50 SMA with the orange line. So I believe price can still go down further. Again, just wait for further evidence. The Greek problems and the crisis in Greece doesn't affect the British pound as much as the euro, of course. So it's not going to be as volatile as the euro. Again, the MACD is above the 0 here. Okay, and again, I just want to go back to the Euro USD on the daily. I forgot to mention, here we are, right now we are kind of in a sideways range. Wait for a breakout either above the 111.50, which is right here, or below the 110. I would not trade at all. I would wait for a few days. The referendum results are going to be with us shortly, later today. I expect price to be very volatile. There could be a huge gap up or gap down. So just stay away from this pair for now. Okay. Now switching to the next one, the Australian USD day. Okay, this was a great pair to trade last week. Again, the red candle shows you the opening of last week and the aftermath of the Greece non-payment. You can see we had with this candle, a huge gap down. So price opened up right here, then quickly filled to close the gap and went higher. The following day went up even higher again, and I asked you to wait for a retracement up to the 76.80. It actually did that. The next candle down after that, this one right here with this bearish black candle, notice that it's an engulfing candle. It completely engulfs the previous candle right there. And if you would have gotten in right there at the open of that candle, you would have made some pretty darn good pips, about 130, 140 pips on its way down. Also, price is now broken below this major support area. I expect price to go down even further, all the way down to the 7,300 area. Okay, I've drawn that in for you right here. However, this is important. What you want to do next is wait for price to retrace back up and then look for selling evidence to the downside for price to continue going down. So, or you can just trade the breakout of the you can wait for the breakout of the 7,500 right here. In other words, that means placing a sell stop order just below the 7,500, probably 74.80, 85, 74.90. So just placing a sell stop right here, or waiting for price to come up a bit. Maybe 30% to 50% of this big huge candle, because I do expect price to retrace back a bit before going further down. Okay, and the MACD here is below 0 as well. So next chart, we've got the New Zealand USD. Okay, this was another easy pair to trade. Now, I mentioned New Zealand is one of the weakest currencies right now. It has been going down, 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 and there's no reason to expect it not to keep going down further. In fact, I expect it to go down all the way to at least the 6,600 area, which I've indicated right here on the chart. So it's broken. You can see after with this the previous week with the big red candle here, price just kind of went down and broke the support area right here of the 6,800. Okay, and I asked you to wait for price to retrace back up before taking a sell trade. With this candle, actually, with this long wick, it actually did come all the way back up to the 6,800. So if you would have taken a sell limit order or parked the sell limit order right about there, you would have made some pretty good pips. However, even though I'm sorry, even if you didn't do that, I asked you to at least wait for a break of the 6,800, and if you would have done that, you still would have made some pretty good pips. So this candle broke the 6,800. You would have gotten in right there, And let's take a look. You would have made about 80, 90 pips. So pretty good, very easy one to trade. The MACD here is still below zero. Again, the usual, what you want to do, we are in a downtrend right here. Sell at a rally, so in other words, wait for price to go back up a bit, okay? I would expect price to go up to here, or perhaps even all the way up to the 6,800 area, and then look for selling evidence to the downside, okay? And or you can just wait for a breakout. See, look at this price level right there, okay? Let me just mark that in for you. Okay, so you look for a price level right there, then look for a breakout below that, and it should be good to go to at least this level here. Okay, and then once price hits here, it probably will retest and bounce up again. Okay, now down to the next pair, which is the US Swiss franc. Okay, with this currency pair, the US Swiss franc daily, last week, again, looking at the red arrow, that's where we started with the week. Price went down by quite a bit, big drop, but I did say to you that 92.50 was an area of support. This area actually held, and price bounced up above that and closed above the 50 SMA. I also asked you to wait to see if price broke above the 93.70, and it actually did with this candle. However, trading this on a daily would have been difficult, because if you would have gotten in right here, well, you wouldn't have. We were testing again another major resistance area, so you couldn't have gotten in even after on the next candle. But it's difficult with the daily candle because this went up so far, so fast, so quick. So again, looking at the 4-hour chart, if you were doing that, let's take a look. With this candle right here, it closed above this resistance area. If you would have gotten in at the open right there, you would have made about, well, retrace down, okay, about 75, 80 pips. Very, very, very good on a 4-hour chart if you're watching that. So again, remember, price went down. On the daily, price went all the way down, tested the 92.50, which I mentioned. It did not close below that, and went right back up, bounced up above the 50 on this is the 4-hour chart. It went with this candle right here. It went up right up to retest the resistance. You just wait for price to break the gray rectangle. It did that with this candle and closed above the gray rectangle with this candle right here. You would have gotten in right there, made some pretty good pips. Again, that's the difference between trading 4-hour and daily charts. Sometimes on a daily chart, you just have to wait and have a little bit more patience. Okay, and this week we are in an uptrend. Buy the dip, wait for a breakout. In other words, price could still come down just a wee bit more to at least a 93.70, maybe down all the way to the 50 SMA in this orange line. So you want to wait for price to come down a bit. Look for a bounce up, and then take a buy trade, or just wait for a breakout. And in this case, you could wait if price breaks up above the 94.50. And closes above 94.50, then you can take a buy trade to the upside. Okay, next chart, the US CAD. Okay, on this currency pair, the US CAD, you can see the strength of the US, and actually for the last 3 days, the US currency has gained quite a bit of strength over the other currencies, so it seems to be one of the strongest currencies right now, and the big question is, will the trend continue? Here, I mentioned last week, just wait for a break above the 124.20. It did with this huge candle. If you would have gotten in right there at the next candle, you again would have made quite a number of pips, about 118 pips. So again, this week, what you want to do, we are in an uptrend continuation. Wait for price. Well, basically, I would say just wait for a breakout of the 125.80 to the upside. Okay, and price should continue. However, we have to be careful of what's going to happen with the Greece situation today and tomorrow. Okay, so that's it for this week. Just be careful, wait a couple of days, let the Greece situation play itself